You know, people often profile you by where you live or what's your job, but behind both of those things lies a far more powerful influence: your financial freedom. Lawyers are very well trained when it comes to arguing cases and to manage risks, but very seldom you find them well trained to manage money. Today, I'm joined by Nico, Tschanz, and we are talking to you about how to build wealth and to have your financial freedom. Follow us. Good morning. Back again with Monday Legal. My guest for today is Nico Tschanz. He is a co-founder of DexBridge Capital. Thank you very much for coming.
Thank you very much for having me, Ahmed. It's a pleasure to be here.
Thanks a lot. DexBridge Capital is a financial institution registered in the IFC, and we are interviewing Nico today to tell us and teach us how to make money as lawyers, because a lot of the young lawyers and even the seasoned, experienced ones are living on you're lucky. And if you don't, you're going to probably need to listen to this episode and learn a lot about finance and how to build wealth as a legal professional. So again, thank you very much for coming. And I would like that you take a little bit of a minute or two to explain and introduce yourself properly to our audience.
Yeah, with pleasure. So, you spelled my name correctly. My name is Nico Tschanz. I'm a co-founder at DexBridge Capital. We're actually incorporated in ADGM in Abu Dhabi. So we chose to go to ADGM instead of DFC because, as you know, in Dubai, DFC got very crowded. So that's why I decided.
Sorry for the mistake.
No worries at all. So, I was born and raised in Switzerland, where as a Swiss guy, there's not much choice to become something else than banker. So I started my career.
Or a lawyer.
Or a lawyer, of course, or farmer.
Okay.
So, but I was not smart enough for becoming a lawyer. So I chose to become a banker. I studied in Bern University and then I started working at UBS in private banking, where I moved to Zurich. And then from Zurich to London, and then from London for 6 months back actually to Switzerland before I came 3 years ago to Dubai, still for UBS. And now I'm here. Last year, I started my own firm. So I'm the co-founder of DexBridge Capital. I'm running the firm together. Now I'm confusing farm with
I
banking
like it.
already. The firm with 3 partners.
Okay.
So, and we are providing financial advisory services to high net worth individuals, lawyers, and amongst others.
Very good. One of the things that I wanted always to ask is, what exactly do you advise? I mean, I understand very well a little bit of finance, a little bit of real estate. I understand how to save. And let's put it this way. A lot of the education and the financial education that we got at school was always to save rather than invest back in the days. And then later on, we learned a little bit that investment is very important. What would be your advice or your contribution to anybody who is in a professional career? They get a salary or a paycheck month by month, and they would like to explore and understand what should they do to start building wealth.
Yeah, so I would say one point that is very important is to start as early as possible. And for me, saving and investing can go hand in hand, right? So what is very important is that you're very consistent and you do it over time. And it's basically the compound effect that is very important in investing. And it's very, as I mentioned, it's very early. The earlier you start, the better, because over time your assets can grow. And it's not important to invest in any fancy investments or, sometimes you see like these crazy products that you can invest in. You should always keep it very simple and over time. So that's much more important than anything else, I would say, in investing.
And in order to learn about this kind of investments for beginners, for young lawyers, for example, who are trying to learn about this or at least to try it for the first time, what sort of tools or systems or applications you would recommend to start up with?
Yeah, so basically, if you want to get something that helps you with no distractions, that you actually keep on investing every month the same amount. There is some apps. One is called Wayan AB. There is every bank basically provides some tools where you can do auto investments. So it's also great if from your salary, for instance, you pay directly a percentage to auto savings investments. So that's already taken care of. And yeah, and then, or just a Excel sheet, like I'm very old school in that way. So I always use an Excel sheet. It's more important to basically visualize what you can set aside and the time frame that you want to invest in. And then there's so many online websites already showing you where you can invest and you can learn. And then obviously there is financial advisors like our firm who can be a part of the journey of investing. And also what is important always, if you choose to go with an investment advisor, that you choose someone who's actually educating yourself, because it's very important in investment that you understand in what you're investing in. So if if you understand the blockchain technology, let's say, as a very opportune
Yeah,
example, if you take the blockchain and you understand it and you want to invest in the Bitcoin and you understand what is the value of the Bitcoin, like I say, like, okay, it's fine, like invest in the Bitcoin. But if you don't really understand what it does and why it's adding value for people, then I would say like stay away and don't overcomplicate the investments.
understood. In very early days, I read a book, and I think it's a very famous book. It's Rich Dad and Poor Dad. And
Right.
one of the things that was very difficult for me to understand in the beginning is that how come a young lawyer who is starting in their career would apply the concept. So one of the most uh, important concepts in this book was pay yourself first, which was the advising on to cutting a percentage of your salary for the investment, more or less. Um, does it really make a difference if someone is getting paid very small amount, and what's the importance of the time? Because you mentioned that you have to start very early, so the time element is also a very important thing. Do you think that you need to be able to cover your essentials in life first in order to be investing, or below a certain threshold you should not be doing it, otherwise it's useless, for example?
So no, there is basically, I would say there is no too small amount to start with investing. And to come back to the book, basically pay yourself first. What it actually means is you want to set aside these investments before you spend anything. So now for every professional and maybe lawyers included who earn more over time, your spending go up as well. So, but you want to kind of cut the spending. So what you want to do is you want to set aside, you want to pay yourself. You want to, let's say 10 to 30% is a good range from your income, net income, to set aside and invest in something that you like or you understand. If you take again into consideration the compound effect, which is very important, what does it do is basically, you set aside money which earns returns. And the compound effect means that these returns over time earn as well. So now you have this compounding effect, which is a very, very powerful tool. And one example I can give you is Warren Buffett. Like everyone knows him. And what he did was not crazy fancy investments. Like he was choosing like very value stocks, but very basic ones, Coca-Cola, like McDonald's, Nike, like everyone knows this stock. It's not something out of this world. So what he started very early, 11 years old. And of course he was smart and all, but he had the time. So interestingly, like 99%, or actually even more than 99% of his total wealth today, he made after 50 years old. So at 50 years old, his net worth was like 300 million. And now he's 95 and his net worth is 130 billion. So he didn't do much else than just over time investing and compounding. And, he started with 11 years old. So he started from zero. So to come back to your question, does it make sense even with a small amount? Yes, it does. And since I'm in finance, and maybe I want to throw in other numbers, if you would start investing with $500 today, let's say you're 25 years old, you just finished your university.
I'm not.
Me neither,
Okay.
but almost. But let's assume a lawyer is finishing the university, is 25 years old. He wants to start investing today over the next 30 years until he's 55. So he would start with zero capital, $500 every month into an index fund, which generates 8% per year. After 30 years, at the age of 55, he would have roughly $750,000. I mean, with zero capital, right? So it's an insane amount, I would say.
Yeah, absolutely. I totally agree with you. Don't you see that in Dubai, it's a bit difficult because if you're a young lawyer in Dubai, the lifestyle kind of suck you into to wear the best suit, to put on the best perfume and to ride this car, because otherwise you're going to be the only one without a Rolex in your hand.
Yeah. Well, I didn't come with the Rolex, by the way, today as well. But no, it's a very valid point. And I think even, all this social media today is influencing a lot people. So what it does, it creates FOMO. It means like, fear of missing out. So you would see in Dubai, of course, you see it on the street and, on the people, how they wear luxury goods. But also online, you see a lot of what others have, but you don't know. The only thing actually is that if someone is driving a $400,000 car, is that he has $400,000 less. It doesn't say anything about his wealth. The only thing is he's less worth now than he was before. So I think you should not, let social media or other people influence your own behaviors. It's very important to set your own goals. And at the end of the day, you need to be confident with what you have and not comparing all the time with what others have. Because especially if you live in places like in Dubai, there's always someone with the nicer villa, with a nicer car, whatever car you drive, there's always something better.
Yes, I totally agree with you, and I second that because I remember myself, honestly, because I was the only guy in the Swiss firm without a Swiss watch until I bought my first watch. And it was my start. And then but I remember very well that I made the decision that I will not buy anything that is expensive until I actually feel financially free, and then decide on. So when I chose my car, I didn't choose the first car as the car of my dreams. I chose from the price list, what can I actually afford after paying the most expensive and the most important part of my sheet, which was investing.
Mm-hmm.
And coming to that point, what is, in your opinion, and a smart, solid investment portfolio? What should everybody think of when they choose building an investment portfolio for themselves, especially if they live here?
Yeah, so this question is really tough to answer, like generally, I would say, because of course it always depends, as you said, like on, let's say, if you are early in your career, you can take a little bit more risk,
Yeah.
If you're in your mid-careers, you can take you have a different risk approach than when you're very early to your retirement. So it really depends a lot of each of the individuals. So what is important to understand, what is my risk appetite? How much can I afford to lose in the next 5-10 years? Is there liquidity needs that I need to cover? Maybe you need to, if you're early in your career as a lawyer, maybe you need to pay back some student debts. Or maybe you have children who will go to college in 3-4 years, so you will need to pay for college. So that's liquidity needs, right? And then you need to know what you're happy with in terms of return. And then also your investment horizon. So all of these 4 things are very basic, honestly, but it's still very important. Because if you're, 60 years old, you have maybe 5 years to retirement, your time horizon is much less than when you're 25 years old. You can take more risks, because if you're gonna lose your money at 60 years old, then it's obviously you don't have time to recover, right? So that's why it's important, and it's very individual. But if you want to give one like general advice, I think it's, just buy the S&P 500 index fund.
Yeah.
And it's maybe not the best marketing now for me to say, and then say like, why would I need a financial advisor? There's other reasons why you might need it.
Yeah.
But if you don't have time, if you don't have any idea, if you don't want to spend like doing research and tracking the stocks every day, then I think that's the easiest and smartest way. And again, just start as early as possible and be consistent about it.
When I think of someone who's earning, I don't know, I just throw a number. If someone earning between $5,000 to $10,000 a month, okay, what percentage would you think they should spend on their life, and what percentage they should put aside for investment? I think a percentage-wise is easier to answer when it comes to life and investment, because a lot of people just put a lot of money on their life, like up to 80-90%, and they take a very small cut on the investment, and they say the compounding effect will help us in the end, will do the work. But what would be the healthy percentage of a salaried employee, for example, to do investments?
I would say anything between 10%, really the bare minimum, to 30% ideally. And then, of course, it depends also a bit where you live. Like, the living costs, obviously in Dubai, the standard living cost I'm talking about are a bit different than, in some European countries or in Switzerland or in Egypt. So it depends a bit how much you can actually put away. So again, it makes sense in the first place to see how much is my living cost, how much are my spendings per month to cover my absolute fixed costs. And then from there, immediately you take away like ideally 10 to 30%, I would say, ideally 20 to 30%, which you set aside for investments.
What sort of mistakes that you see professionals, especially who are salaried employees, do when it comes to investments? Because there must be like common mistakes that everybody is falling for.
Common mistakes I see is that people actually trade rather than invest. So now what's the difference? Trading, involves like daily trading or weekly trading. It's like buying in and out stocks. So which you can do if you have time. Now, most of the people especially who are employed, they don't have time to monitor the stocks like every day,
Yeah.
So investing is much more, the success rate to be successful in investing over a long period of time is much higher than in trading, actually. So I would say too many people make the mistake that they try to do trading and chase quick returns. So, there is unfortunately no such thing as quick and high returns in most of the cases. And I see it a lot of people coming, talking to people, they coming and saying like, okay, I'm making 15% a month. But of course, I always tell him, if you make 15, and then he wants to sell me the product, right?
Yeah.
So if you make 15% a month, you don't need to sell your product. People will come to you, you would not need to sell anything with these returns. If it's too good to be true, it's like most likely too good to be true.
Yes. What's your take on real estate, index funds, and private equity in general for professionals?
Yeah, so again, I think it depends a lot on the investor itself. Like if you understand what private equity does and you understand the risk related with investing in private equity, and now to give you an example, private equity and real estate are rather illiquid in most of the cases, rather illiquid assets. So once you buy it, you cannot sell it immediately, especially real estate. Private equity, it depends a bit, but normally, private equity is you invest over a period of time, and then after 3, 4, 5 years, you start to harvest only your returns. So you need to be aware like of your illiquidity risk, for instance. Then indices or even, structured notes, I would say they make a lot of sense. They're more easy to understand. They give you nice returns as well. But in general, it really depends if the investor understands what he's investing in, and then he sees the differences and he can he can relate that to his risks, then he can invest in it, right? Or if he doesn't understand, then maybe he needs to someone who is teaching him, or he needs to educate himself.
So enough talking about the young lawyers. Let's talk about the senior ones who
Old
are
ones.
thinking of the very old ones who are thinking of retiring. What sort of approach would you advise to seasoned or more senior lawyer if they're starting planning to retire early? Let's say they wanna. I'm in my 40s, and I would say like I don't want to work beyond 55.
Okay.
What could have been the advice you give them?
Yeah, no, it's in this age, let's say in your 40s, it's very important. Well, most likely your salary increases, right?
Of course.
So you have more income. So first of all, it's important to use this more income to increase your automated savings that we talked about earlier, right? So the percentage maybe can even go up, because if you're not spending crazy now on more consumption goods, then you have more to invest and grow that over time. So it's not only obviously important to the time, but also the amount that you invest in. So you can increase your investments. And then it's very important to, diversify out of one income.
Mm-hmm.
So it's maybe even another mistake many people do. So they rely on one income, and they misconfuse, or they confuse income with wealth, which is actually not true. So if you have only one income stream, you never know what happens. Like your company can go bust, you can get fired, whatever worst case scenario, it can happen, right? If you have one income stream, your income is gone if something bad happens. So you want to, in this age, you want to diversify into multiple income streams. Now, how you can do that, there's different ways to do it. There is, first of all, you can obviously buy real estate and rent it out, so you will get the rent.
Yeah.
Second is you buy income generating assets like bonds, structured notes that pay out coupons. Asset classes like this make a lot of sense. So you generate actually from your investment another income stream. Or you can, start your side hustle or your own small firm or whatever that just generates income. And to come back to the book that we spoke earlier.
Yeah.
So, you want to make that money actually work for you and not just work for money.
Yeah.
So I think that's very important.
At this age, at this stage in the 40s, we are more senior, and we, yes, get more income, but sometimes we even get a bulk of money or a big chunk at one time because we handled a big case, and we get a big bonus at the end of the year because of something that we do. I can tell you with all honesty, the first thing that comes to my mind, I'm going to buy a new car, or I'm going to buy a new watch. And it's not really investing if I get a big amount. And I think you don't agree with that approach, but what would be your advice if a mid-level lawyer got the opportunity to have a big chunk of bonus at the end of the year? What should they do with it?
I mean, I would lie if I wouldn't agree, at least partially. I mean, everyone likes nice cars. I like Swiss watches as well. And I like nice houses like this as well. So everyone likes the things, but I think it needs to be like, again, like you need to be aware of what you can really, if you can really afford it to buy, and it really makes sense in your daily life. So you don't want to buy something that is too much for your, even if the bonus is big, but you don't want to buy like something that is eating away 80% of your bonus. But my opinion is like you want to treat yourself, but meaningfully, let's say. If you get a really nice bonus and you want to take your girlfriend or your wife over a very nice place over a weekend, it's a super good idea to do. If you want to buy yourself a watch that you can afford, it's a nice thing to do, in my opinion. But then on the other hand, you also want to set aside maybe 80% or 70% of your nice bonus for the future, and you want to invest because you don't know what happens again in the future. So you want to probably invest that amount. But yeah, I would say like it should be a mix of maybe both. It shouldn't be like only consumption luxury goods that all of us kind of like and want, but it should be like a fair amount of split. Or what I like to do or to advise, also it's sometimes it's good to pay back, like normally you don't get to 45 years old and you make $500,000 a year without support from anyone. So it's always nice to think of people who actually helped you in your time when you grew and where in the time where you are today, right? So you might want to buy the watch not for yourself but for your dad, or for your something nice for your mom, or friends or mentors or whoever helped you where you are today.
Yeah. And if someone is nearing the retirement, or some soon to retire, for example, what sort of smart allocation strategy they should follow, from your opinion?
So if you go towards retirement, it makes sense, to shift from growth to capital preservation.
Yeah.
So you would want to have like an anchor of like income generating asset classes like bonds, dividend paying stocks, structured notes. So all of this, you want to shift into those to generate income. And why? Mainly because obviously at some point you will not get the salary anymore, right? So ideally, you would want to have as much assets possible or investments possible that your daily expenses or your lifestyle expenses are covered from investment. And it's very important, especially towards retirement, that you have this, peace of mind. Okay, I can retire. If you want to retire early and you're 55 years old and you have, I don't know, $5 million in investments that pays you your lifestyle expenses, whatever you need for the year, then that gives you peace of mind. You can sleep, you can use whatever else is coming in. I don't know, maybe from another source of salary or whatever you can use for other spendings, but at least your basic needs are covered.
It's funny to say this, but I know of very senior lawyers, no names, who are very well paid. I know for a fact that they are very, very well paid, and they still have trouble managing their financials. Sometimes I just don't understand why it happens to them. I mean, someone who's very well versed, senior in his field, he knows very well the law and he understands it very well, but still the financial intelligence is not as high as their professional acumen as lawyers and as very smart professionals. And they still struggle with the paycheck to paycheck while they're very highly paid. What is the problem?
I mean, I see maybe two problems, and one could be, they overcomplicate the things. So now being super smart in your profession doesn't mean that you are super smart in investing or in finance and you know what to do. It's actually the other way around. The smarter you are, the more you try to find like, crazy investments, you want to do structures that are very complicated because you think, yeah, I'm smart, I understand what I'm doing. Or you have even friends who are in finance and they do it. And that's also something else, in investments, everyone always just makes money. Like you never hear someone saying like, oh, fuck, I lost like 50% of my investments, right?
Yeah.
So you only hear like the good things always. And that's one thing. The second one is the spending, right? So the higher lifestyle. So immediately when you have a pay rise, you start to spend more. So what we discussed also, like, you buy the fancier car, the more expensive luxury goods. So you should not increase it too quickly. And I think that's these two are the most common mistakes.
Can you share with us a story without names of a client or someone who you advised, for example, and they turned things around from bad to good, or the other way around, something that we can learn from?
So I had this one client when I was still working at UBS in 2018. He actually had a firm, like his own firm. And in 2018, this firm didn't really produce much cash flow. He paid himself a salary, but there was only one income, the salary. And he had partner in his firm. And, because of it didn't really work out well, they left. So they, I think, sold the equity and he was left, I think, with one partner. But he was very consistent and he was very sure that what he's doing is actually adding value. So he was in oil drilling, so it's a very specific thing to do, but he invented a tool to make it easy to drill oil, right? In 2024, like the company was worth $100 million. I think what he did well, like he believed in himself and what he does.
Yeah.
And he was consistent over this time and he was working hard. Yeah, now he has a company that's worth $100 million. And what we did with him is we we helped him obviously to sell the stakes of his company and then generate different income streams from it. So, he would buy like real estate. He would invest obviously a big portion in the financial markets where he was generating income. And what we did, we wanted to create this peace of mind for him. So what we did is generated a portfolio to cover all his, and honestly, it was quite high in his lifestyle expenses, but covered like his lifestyle expenses. And I think what we can learn from that is, you need to believe in yourself. You need to work hard, and again, you need time to make things work, and then you need to basically, generate different income streams.
Yeah. What are the red flags when you see any client coming to you and tell you, okay, I have the portfolio of, I don't know, $2 million of net worth, and I want to work with you. What are the red flags from your opinion that we say that this is going to be a tough client to deal with, or this is someone who will not follow our advices?
Yeah, so I think one red flag is if the guy comes with, too high expectation on returns and he wants to chase this quick returns, and it's almost impossible to deal with. Like sometimes they come from, this cryptocurrencies where they made a lot of returns, and then you offer them 10 to 14% a year, which is a nice return, but they're not interested in it. So it really makes it difficult. So in terms of dealing with a client, it's kind of a red flag, I would say. And then I think what is a red flag for a client is maybe even, for us, obviously, as a regulated firm, if there is any,
of course,
illegal activity.
Issue.
Exactly. Yeah. So any due diligence, any AML. So this is obviously a red flag. Yeah. But for the client itself, a red flag in investing, let's say, would be, I think, if, again, chasing quick returns and, with high returns with zero risk, which is a red flag if someone offers you that, like to turn the perspective. And then having no emergency funds. It's something that many people don't have. And even though you should invest, but you should always have cash as well, like to cover like at least 6 to 12 months of your lifestyle expenses, because you never know what happens in life. And maybe another red flag is the bad debts, like that we talked about as well. Like you don't want to take credit for spending on luxury goods or expensive lifestyle.
Do you think every lawyer should have a financial advisor?
Yes.
Yes.
No, well, it depends, I would say, like how early in your career you are, like how much time do you want to spend? How much do you want to educate yourself? How much do you understand yourself? If you're in your 20s and 30s, maybe, and you have time to manage your portfolio, you know what you're doing, and you can basically also do it yourself if you're consistent enough. I would say in that age, like it makes sense if you want to learn more, maybe you want to have a financial advisor who is educating yourself, who is like kind of a coach, like keeps you consistent. Like, are you really investing every month? It's more important like to be like a bit of the coach and the education part of it. If it comes to the, in your 30s, 40s, 50s, it gets more complicated, right? You probably have family, you probably have businesses or different businesses. And then you're coming to an age where you're close to retirement. You want to be aware to not make any mistakes. So then obviously it's much more important to work with someone who is an expert in the field, right? Like, I mean, if you're a lawyer, you maybe the argument with the neighbor you can handle yourself. But if you want to go in front of the court, you need a lawyer, right? Who
100%.
Prevents costly mistakes. So it's basically the same in finance, I would say.
When do you think it's too late to invest?
well, it's never too late. I think what is much more important is that you start investing like today. There's a saying, that the best tree you planted 20 years ago, but the second best time is today.
Yeah.
So it's exactly the same. Like you better start today than tomorrow, let's say. So I would say it's never too late.
And what advice would you give me, for example, if I did not start investing and I want in 10 years to be financially free or financially stable? What sort of investment I should look at, or how should I start?
Yeah, so I think what you mentioned at the end is very important, that you actually start. And then what is important is to have a goal in mind, like, okay, you say in 10 years to be financially confident, or even having financial freedom. How much do you need for that? Like, is it for you and your lifestyle? Is it like $500,000? Is it 1 million? Is it 10 million? It's different for each of the people. So now you want to know exactly what you need, and then kind of reverse engineer it and start and automate your investments exactly to calculate where you want to be in 10 years, and then start investing.
So out of all the advices that you gave us, can you please explain to me what exactly DexBridge Capital can help me with, and how can we start, for example?
Yeah, sure. So DexBridge Capital, again, is an investment advisory firm. So what we do is we help people with building portfolios. We are very focused on building resilient portfolios. So you can imagine that whatever the market does, and markets are super volatile, especially now, right? Like whatever happens in geopolitics or with the Trump administration. So it's super volatile. So we generate portfolios which are very resilient for different market movements. And the portfolio also, we have a focus on generating income. So it doesn't really matter for us if the investor of our client is early in his career or late in his career, but we try to generate a lot of income to cover his expenses. So that's very important for us. And the ideal client for us is the high net worth individual. From a regulatory perspective, we can also only cover professional clients. So that's for sure something that is not even in our hands. Even if we would like to have, let's say, smaller investments from clients, we cannot really cover it.
Yeah. Well, at the end, I would like to thank you very much for all the knowledge you shared with us. And if you have any last tips or advice to give to our audience, please feel free.
Yeah, no, thank you very much for having me today. It was a real pleasure being here. And I mean, one tip to give is it's maybe not enough, but I would say, start early, start automating your investments, be consistent. And if you don't know what to do, and if you don't have anyone who can help you, just buy the S&P 500 index.
Thank you so much.
Thank you, Ahmed.
Well, I think you heard them right. Start today. You know very well what to do. You have to invest. Your professional career is one thing, but at the other hand, your life has to be financially supported. And if you want to give more focus into your professional career, you have to be financially free. And you'll be able to do that if you build your financial confidence by investing. So start today or call Nico. Thank you.